Thank you. Quick question: who's passionate here about compliance? Okay, that's four more than I expected. When I started working in the area and I was like, okay, I'm going to be working on compliance products. It's like, okay, how dynamic and interesting can be, and it was a revelation for me. Basically, what I'm going to be sharing as part of this presentation are a couple of pointers besides the intro itself. I'll be just running through some regulations. I know this track will be hearing a lot about regulations, regulatory frameworks, whatnot. During the day, but I'll be mostly focusing on the last 3 points, basically going a bit more in depth around KYT, travel rule, what does it mean in practice, very briefly on some of our products we are basically developing and working on, and mostly about some insights we found with working over with 200 customers in solutions when they have actual compliance need, and what does it actually mean in practice. Just as a short context and introduction, my background is in business development. I've been working with big crypto blockchain companies for past 3 years, and generally, before that, I was working with a bunch of startups, helping them get their ideas to market and find an investment. So I'll be speaking also a bit maybe from a that perspective of building something end to end and making sure that it's being used and is being leveraged in a proper way. And in free time, I'm board working. So if anybody's passionate about that, you can also approach me in the break. About Fireblocks, I guess a good % of people know what Fireblocks is. Just to kind of paint you a picture and give you a context, we are basically at this stage close to an ecosystem. We offer a big variety of different solutions and tools. Roughly speaking, around 20-25%, it varies obviously, of all blockchain transactions are happening on our infrastructure. So I would say we have a fairly big overview of customers and the actual use cases that are happening. The products itself vary from everything, secure custody, interacting with 60+ blockchains, operationalizing the governments using different dynamic policy sets and configurations. You can basically control and automate a bunch of things. We have a huge Fireblocks network of counterparties of over 1,000 different counterparties who are using different ways to interact directly with each other with ease. And last but not least, on the DeFi and Web3 exercise, we offer a wide spectrum of different connectivity. Just to kind of give you a size context, we have roughly around 1,800 customers and a bunch of wallets and transactions that are happening on a monthly basis. These are some just of the clients who are using basically our infrastructure for their work. Also, one last point on the Fireblocks side. I'm very happy to say that for a year and a half now, we have a Belgrade office. And actually, compliance and security team working on this solution is basically sitting here and developing this. So we're very proud of that, and we actually have a couple of openings now. So do check out our page. I think we have 4 or 5 different openings for the Belgrade office. That being said, let's jump into the actual content of the talk. As I said, not gonna go deep diving into regulations too much, just kind of giving you a very quick overview. We can, and I'm not gonna going in the perspective of kind of, let's say, political or conceptual, philosophical conversation. Is this good? Is this bad? It's here. Like some might argue that it's against blockchain values, that it's regulated, that anonymity is very threatened. Like, is this good? How are we treating that? Not going into that. Like, the regulators are here. Regulations are becoming more and more specific with each month, and the asks that are required from everybody who is interacting with digital assets are bigger and bigger than ever before. And what we're seeing as a kind of trend from the ground is that even the regulations that were very kind of open-ended for interpretation are becoming much more specific and much more concrete, and regulators are actually asking virtual asset service providers, anybody who's kind of interacting with digital assets in a certain way, to actually go in depth and understand, okay, are you doing the proper thing? We heard a couple of examples on the previous talk on, what can happen and how can, courts and let's say officials look at different things that we are working in the whole space. To give you a flavor, like different regulations across the world are coming. You heard about MiCA probably, and then across the world we're seeing a bunch of different specific and blockchain specific, digital asset specific regulations coming in. So it's definitely there. It's not going to go. The only question is how it's going to shape up, and B, what are we going to do as builders, infrastructure providers, to basically make sure we're doing a proper thing, and it's at the end of the day legal and compliant. Nobody wants to end up in jail at the end of the day. You can also see here the overview of regions and what's kind of popping up and what are the specific asks that are coming from different regulators' perspective when you're interacting with digital asset. Again, not going into specific, but as you can see, big players worldwide are getting more regulated, and we need to make sure that on one side we follow those regulations, and on the other side we actually can do whatever our business model is. Is it an OCC desk? Is it a a centralized exchange? Is it whatever we're trying to make and do, that it's still technology that we actually wanna push for. What I'm going to be focusing on are basically KYT and AML and travel rule landscape. Those are some of the things we have been focusing on in the past period. So basically, just as a quick crash course, and I know most of you know this, but for those of you who don't, when you're speaking about the KYT, knowing your transaction context, the general push from regulators is making sure we have right enough context when we are interacting with a specific transaction, and we actually know what's happening there. Like obviously a bunch of that is publicly accessible. If you go to any node, then you can actually check out who's doing what, but you see a bunch of numbers, you see a bunch of data being pulled out there. But do you know who it is? Do you know who you're sending it to? Do you know, have they any specific ties or limitations? And obviously, the worst thing you can probably do is doing unknowingly something that can be deemed illegal or not good. More specifically, if we're speaking about the AML side of things, anti-money laundering, the way I explain it to myself, it's making sure not sending the terrorist the money. So whoever is deemed as terrorist, again, a completely different in the political conversation, but here looking at the definitions, we don't want to be sending money to the bad guys, and we need to prove to local authorities, if asked, that we have policies, systems in place so we don't do that, and we have redundancies and back options that we don't actually doing knowingly or unknowingly. And you can actually see it. We had conversation with some of the houses that are doing reviews of these policies, that it's not even enough that you have one thing in place. On previous talk, somebody said there was a example of, oh, we have Chainalysis. Now we're seeing regulators coming in and asking about, do you have a double tech stack? Do you have a backup? What if Chainalysis doesn't work? Do you have policies configured in a way that is synced with your local laws and local requirements? So it's becoming more and more complex, and you still you're doing your regular operations. Like I went, especially when we were I was entering the field, there was a kind of vibe of, oh, it's a thing we need to do for regulators, kind of a check off the box. I do it on the side, and I'm good. Now we're seeing customers coming back and diving much more in depth, and actually making sure that they don't do anything that might be deemed potentially suspicious or has a high risk rate. On the other side, we have a new in the regulatory context, new kind of thing, which is travel rule. I'll be speaking more about it later, but basically, if you imagine it, it's something most close to SWIFT, which we have in traditional finances. So basically what happened is that to be travel rule compliant, alongside with your regular transaction information, which is your originator address, sender address, amount, asset, the usual ones you can find, you actually need to accompany a bunch of, let's say, metadata in a way alongside with that transaction, so you are travel rule compliant. That data is super touchy, because all of it is deemed PII information, so personal identifying information. You can ask for everything: geographical address, name and surname, social security number, a bunch of kind of different data points there that different jurisdiction might deem necessary, because they're trying to contextualize and say, if you know who are you sending through and where it's coming from, the chance of it, you know, being an illegal action, or that you can defend yourself in court, oh, we didn't know what we were doing, becomes much less. What we have as an issue, and I'll be discussing that in the last part of the talk, is the whole sunrise issue the travel rule has today, because it's a new thing. Nobody's actually really sure how to do it fully. You have different interpretations, and you know, you have just now bigger players getting onboarded to it. So you want to make sure that you're building a relevant products and you're doing, you know, concrete things there. And yeah, as you can see, trend one, as I mentioned, AML, this is the CFTs and general requirements from WASP are becoming pretty much your vanilla flavor of regulations. It's not like, do you need it? It's just how much you need it and how are you going to make sure that you actually, you know, AML compliant at the end of the day, whichever provider or solution in-house or third party you're using at the end of the day. On the other side is the travel rule, and you know, we can call it harmonization, we can call it, you know, how are we getting onboarded collectively on a global and individual regional levels with the whole context and problematics. Bottom line is, it's here. It's going to be much more specific than it is now, and the regulations are going to be much more, let's say, hardline than they were before, which were kind of, you know, we were in an area of, oh, kind of, I'm doing my best, you know, oh, I have some integration. Are all the transactions going through that integration? Are all of them being checked? That's a story for another day. The another day is here. You need to make sure you're doing the right things. So I'll be sharing also some insights we've seen from the grounds up working with customers on these solutions. Just to give you context, what are we basically offering and doing? We're providing integrations with on two fronts, so both KYT, AML, and travel rule. The access is both through our API and console, and the general idea behind that is, on top of the integrations we have with different providers, we are offering a policy layer of customization where customers can actually set a bunch of different rules and, you know, configs, so they have automatic checks and making sure we don't send something, you know, to the bad guys at the end of the day. Today, what we have are direct integrations with Chainalysis, both V1, V2, Elliptic and Elliptic Holistic, which is their V2. And on the travel rule side, we developed a first ever on the market direct integration with Notabene. And we also do some basic trust travel rule protocol support. What we're basically seeing across the field is that customers, there's a growing appetite from customers to have solutions like this in place. We're also in communication with a bunch of different other, let's say, smaller or mid-market players on the IML provider side, and it's there. It's needed, and customers are using it more and more. To give you context, I was just looking at the last month numbers, and around 18% of all Fireblocks transactions we have today are screened. And it's growing, and it's ever-growing number. So there's something which is picking up, especially in, I would say from our angle in the last year or so, and we're seeing a large number of customers, you know, wanting solution, implementing solution, because again, regulators are coming, they're asking very specific things, and you need to make sure, you know, you're compliant in the end of the day. Just to paint you a picture of what we generally do, our compliance checks are very early on in the transaction lifecycle that we are supporting for our customers on the Fireblocks platform. So what we generally do, both for outgoing and incoming scenario of transactions, we have something called screening policy, when customers define out of all the transaction volumes, what are the ones they want to screen and check against the specific either AML check or travel rule check. And then based on that, we send it to provider. Provider gets the response of underlying risk called travel rule compliance. And then based on that, we make a verdict. Actually, we help customers to make a verdict through defining the post-screening policy. What's kind of interesting there is that, you know, obviously this came from kind of customer asks based on, you know, you might not be wanting to doing some checks for different types of transactions. Like, you're doing internal transfers, you know what's the context, you know who you're sending through, so you don't want to be going through this. Obviously, the delta when we're kind of communicating with the provider varies on the risk level, varies on the multiple kind of factors that we're seeing across different providers. But you get the general idea. We don't want to be, let's say, allowing in a way our customers to send something through which is not deemed safe by the internal policy, whatever their internal compliance policies may be. So if and then it's kind of interesting because like if you look at different customers, they might be having a completely different kind of configurations. Some, let's say, if I receive a transaction that is connected to, let's say, gambling venue, some customers might say it's a high risk for us. We don't want to be touching that transaction because it's out of the bounds for us. While others, let's say customers who are interacting with gambling venues, it's completely fine with them. But then you also want to make sure that address that you want to interact with, it's not on OFAC sanction list, it's not being deemed as a high risk from other parameters, or that in case of the travel rule, you're actually sending all the necessary information through to be travel rule compliant. Let me just check. We're good on the time. I'll share 4 key insights of something that we have seen from the practice, and also feel free. We're gonna have some time for questions, just to kind of shoot them organically. Just to kind of give you a context, we're roughly doing around 2.5 million screenings per month for our customers, and roughly 250 customers are using our products each month. So insight number 1, the let's say speed versus safety conversation. Depending on the customer profile we're seeing and then the business model they have, the speed might be a key parameter for them, which means that they're gonna have a very limited window on which they need to realize the transaction. So they're not gonna be able to wait too much for the information and feedback there. Usually, like these business models, they would say, "Oh, we just want to check it out, send it out, and if we receive the result of the check, fine, let's apply it and act on it. If we don't, we're treating it as a kind of I did my best in the time I had. I did my best, and this is what we received. We tried to check, but let's move forward." On the other side of the spectrum, on the more safety side, we're seeing customers who are basically saying, anything that is not low risk is being stopped. We don't want to interact. We don't want to touch that. We don't want to send that transaction through. We don't care if it takes 10 minutes even or 15 minutes even to get the result. We're actually, we're going to wait until it basically hits and we receive the result from a provider, and based on that, act accordingly. Those are 2 extremes. And then everything in between. What's good and what I can say is that we're getting less and less customers using it in a way of speed, because regulation is coming and you actually need to make sure that you have things in place and you're doing the right thing when you're interacting with different especially unknown addresses, or the addresses that might be deemed risky, directly, indirectly, however you kind of like to deem it there. Also, what's kind of interesting trend that we're seeing from a kind of safety side of things is that customers are getting more and more into very specific and more complex policies, internal compliance policies than they used to have. Again, going to the point of they want to make sure they're doing right by different regulators, or especially if they're doing kind of international business and they have to kind of follow different local jurisdiction and regulations that they are. Second point, what I wanted to share and that I briefly mentioned is the whole sunrise issue of the travel rule that we are generally seeing. The travel rule was a big hype, especially last year. A new regulation coming in, a new need for that. There is generally still very big appetite for implementing travel rule checks. The problem that the whole industry is facing is that not enough counterparties are travel rule compliant, meaning that when you send something from point A to point B, and point A is compliant and has the right information, and you did everything you could on your end, you have the problem of, is the party B travel rule compliant, and do they have the necessary information and context, so you can actually piece the puzzle out and say, oh, we have, the travel rule message is complete because we know we have the data end to end, and we know the context of the sender and receiver, and we can, provide the proof of that to our regulators if they ever come asking. The trick there is that what we're basically seeing is a very kind of, let's say, layered approach to onboarding to travel rule, meaning that you're probably going to see customers first doing it on themselves, and they're saying, we're doing our best, we're sending the info we can out there, and then we're hoping to get more and more counterparties involved, so they're also sending their information there. And what we're seeing also is that regulators are fairly okay with that. They're saying, we understand the sunrise issue, we understand it's going to take time for it to be fully, fully in place, and then they're ready to say, okay, let's collectively do our best to go into that, but not speaking about time horizon, but let's say I could imagine a scenario, let's say 1, 2, 3 years from now, then when it's going to be a much more specific and not so much the best effort kind of basis. And also, you can also see that by the regulations being pushed. I remember specifically for Mika, I think it was pushed 3 or 4 times so far. Yeah, I know it was supposed to go out at one point September last year, then it got pushed, to later end of the year, and then it, is coming on this year. So it's also regulators understand that, but also do mind that what you're seeing from customer perspective, especially around the, let's say, travel rule type of checks, when they are required to get a bunch more information than they, that they have, it takes time to integrate. Like we're seeing customers taking months to integrate with these solutions because out of the blue, they need to start collecting a bunch of additional data, which brings me to the third point. One of the nature of the travel rule, as I mentioned, is sharing a bunch of PII, very sensitive data along the way. So imagine you were, let's say, a bank X. Doesn't really matter how big you are, or let's say you only focus on digital part of things. You're very focused on digital assets, blockchain, wow, everything is amazing, you're specifying for that. And then out of the blue, there is a regulation coming in asking that you need to send, let's say in the name of your user, a bunch of information like, okay, name, surname, email address you probably already have, social security number, geographical address, legal entity name, a bunch of other things. Do you have it? Do you store it in your DB? Do you store it safely in your DB? Are you ready with your architecture and layers you have in place to share that PII data in an encrypted way with the counterparty so the travel rule message gets, checked? So you need to start thinking on these things, and especially, like, I would even make an argument that it's non-depending how big you are, like very big or very small, you're gonna have, to change a few things the way you are doing so far if you didn't plan to collect that type of information, store it, and secure it at the end of the day. So it's one of the things that is very interesting, because we've seen customers who do take time when integrating with travel rule solution, but then the biggest kind of obstacle for them is making sure they actually have a way to collect the necessary data, and actually store it in a proper way from their users. Like imagine being a bank with 1 million users, and obviously it's not even the biggest bank. You have 10+ million users easily, and you need to ask them, oh, you know what? You need to provide me these new 10 data points to be able to send the transactions through, because we have a new regulations coming in. So you can imagine the compliance, legal, marketing, product, however you like, problem that you have across your organization that you need to kind of communicate and build up good enough solution to actually, make it happen at the end of the day. And fourth insight I wanted to share is, building a scalable solution from right on. And I think, maybe this is more coming from, product and R&D perspective, but one of the, let's say, I wouldn't say a rule of thumb trend, but especially when you're in development, is saying, yeah, we're gonna solve that, scalability issue once we get there. we had situations when we saw customers 2xing in a matter of less than a year and using the products, which is on one side amazing, you know, saying, oh, the product is being used, it's relevant, it's all is good. But then you need to, you know, check, are you processing enough of transactions in second? Can you support, you know, different needs and configurations? Did you think about how it's going to impact customers' operations? And, you know, especially if we have a collective mindset of, oh, I'm integrating with risk, travel rule, whatever provider, just to check on the box from a regulatory perspective. And now you have to implement that on a bunch variety, if not all of the transactions you're doing, and it's impacting your transaction processing time, it's impacting your, you know, end-to-end time. It just becomes crazy. Like, did you think about it? Did you plan ahead? How are you communicating that with your customers? Because, you know, these things do take time. You know, providers are collectively working on their improving on the speed of getting and fetching the results, because there's much more data than it was before. It still takes time to conduct these checks. You know, in some scenarios, you have like, oh, we're gonna get a result in a couple of seconds. In some scenarios, you're not getting results in 15 minutes. Imagine having a pissed customer on the other end, you know, yelling at you why my transaction is not going through. And then to spice everything up, it's the regulation is coming from, let's say, a traditional finance context, where they didn't have a problem of, you know, blockchain, you know, confirmation blocks, how much time different blockchains need to conduct different things. And then the obvious differences with different blockchains, how do you interact, and then how do you put these kind of safety checks in place for different contexts. So now you have like even official recommendations. To give you an example of Chainalysis in their V2 solution, they're saying we are recommending for the incoming transactions to get at least 10 minutes timeout, because depending on a blockchain, the first block confirmation or end block confirmation that need to happen might take update, especially if you're cheap on gas. So what you wanna kind of make sure there is you're thinking about this issue for your end users and customers, because they're gonna be impacted, and actually making a balance between, you know, what you're doing is safe and good, but you're not taking too long. In ideal world, you're very fast when you're kind of developing these type of solutions. And with that, I'm gonna thank you. I think we're in the top of the hour, so yeah. Do we have time for questions? One question, yeah.
Yes, so for example, with the regulation, we have Uniswap or Aave, and because of sanctions, could it be possible that in the future these platforms are not allowed to serve, for example, people from North Korea or Cuba? Is this five?
Yes. Yeah, that could easily happen.
And so they would solve to be compliant with all this information proven by zero knowledge proofs, so it is not publicly on the chain, or how would they do it?
So it can go in, let's say, many different solutions from that point on. But practically, if you, let's say, if we take a step back on the current regulations, if you take on the OFAC sanction list, for example, like how it's been, like it's a very, let's say, political way of defining who's on the OFAC sanction list. You know, it's been, you know, harvested, contained, you can say, by the Westworld, you know, in a way, to a certain extent. And then when you say that, like, you today have blocks on different people, organization, and countries interacting, which, you know, whichever, let's say, centralized exchange and whatnot, and you need to comply to that. If you're gonna get a license, let's say, I don't know, you're applying for a Singapore license, you need to prove you're not, let's say, interacting with a North Korean entity, or you are making sure you have redundancies in place to cut the scenario and to make sure, you know, you're blocking them in a way. So it's already happened today. It's there. The way it's gonna happen, and this. I think it's very interesting what you had with the Z keys, and also it ties back in a way to a digital identity piece on how it's being managed, and you know, how do we build solutions on top of that. So I think different venues are going to have different kind of solutions to build that. What we're from at least my perspective, what I'm seeing is that it's kind of getting, you know, we are in the stage of, let's say, early standard settings, and we're gonna have standard wars in a way coming in next period, like who has the best travel rule contextualization, like from the provider side of different travel rule players, who understand this best, and because you have like philosophical and conceptual clashes between different providers today. So at one point it's gonna become like, you know, a bread and butter kind of like a global standard we need to comply with. How it's gonna look like, I don't think anybody knows at this stage, but I think it's also interesting on how can we leverage the technology we know and we know we could have soon to solving these issues. And we're seeing, again, from my perspective, a growing number of regulators who are very eager to learn on how can we leverage the new technology to solve the, let's say, new and old problems we had in the past in the field. So yeah.